Today, we're going to talk about something new and pretty unique, a way to invest in one of India's fastest growing industries, the hospital sector. We're going to dive deep into the Groww BSE Hospitals ETF. So, have you ever seen these huge hospital chains popping up everywhere and thought, man, how do I get a piece of that action? Invest in the whole trend? Well, this new fund we're looking at, it's designed to be a direct answer to exactly that question. All right, let's get into it. Before we start picking apart the fund itself, we really need to understand the big story that's driving all of this, and that's the massive boom happening in India's healthcare sector.
So what's really fueling this fire? Well, it boils down to four key things. First, you've just got more people wanting better healthcare. That's a simple one. Second, India is fast becoming a go-to spot for medical tourism. Third, we're seeing this huge shift from small standalone clinics to big organized hospital brands. And finally, and this is a big one, more and more of us are getting health insurance, which means we can actually afford better treatment.
Now, here's where the timing gets interesting. The BSE Hospitals Index, that's the index this fund is built to follow. It had a fantastic run, but it's recently pulled back from its peak of around 5,400. This could be for a bunch of reasons, maybe a post-pandemic cool down or just the overall market mood. But for some investors, especially those with a long-term mindset, a dip like this can look like a pretty attractive entry point. So, we've seen the big picture, the why behind all of this. Now, let's look at the actual tool, the how, that's been designed to tap into this whole trend. For anyone who might be new to this, let's do a quick breakdown. An ETF, or exchange-traded fund, is basically a basket of stocks that you can buy and sell on the stock market with a single click, just like you would with a single share of a company. The whole point is to mirror the performance of a specific index. Super simple. And this slide just nails the difference perfectly. Think of a broad market ETF, like one that tracks the Nifty 50, as a mixed fruit basket. You get a little bit of everything, some tech, some banking, some auto. But a sectoral ETF, like this hospital's one, is a specialized basket. It's packed with just one type of fruit. In this case, it's all about stocks of listed hospital companies. It's a very focused bet. So here's the kicker. If you specifically want to invest in that basket of hospital stocks, the BSE Hospitals Index, through an ETF, well, this is it. This is the only game in town right now. It's the very first of its kind, giving you exclusive access. Okay, let's switch gears and get into the practical stuff. Here is everything you need to know about the new fund offer, or the NFO. You might want to mark your calendar for these. The NFO opens up on February 11th and it closes on the 25th. That's your window to invest at the initial price. After that, on March 5th is the allotment date. That's when the units are officially handed out to investors. And then, pretty soon after that, it'll be listed on the stock exchange where you can buy and sell it anytime. And the numbers? They've kept it really straightforward. The offer price is just 10 rupees per unit, and you can start with as little as 500 rupees. And one really nice feature here, there is zero exit load. That means if you decide to sell your units down the line, you won't get hit with a fee for it. All right, now it's time for an absolutely essential reality check. Every single investment has risks, but with a super focused fund like this one, it is so important that you understand the potential downsides before you even think about putting money in. And look, there's no hiding it. You can see it right here on the official riskometer. This fund is classified as very high risk. So let's be crystal clear about what that actually means. Very high risk really comes down to one simple word: concentration. You're not spreading your money out. You're making a big focus bet on a single industry. And what that means is the fund's value can be way more volatile. It can swing up and down much more dramatically. Its performance is completely tied to the good news, the bad news, the regulations, everything that happens in the hospital sector and that sector alone. So after all that, we've got the growth story, the tool itself, the costs, and of course the risks. We land at the final, and honestly, the most important question of all. Does this investment actually fit into your personal strategy? Now, while this is a passive fund that's just designed to track an index, it's still being steered by an experienced hand. The fund manager is Nikhil Satam, and his job is to make sure all the mechanics are working and that the ETF is properly mirroring its benchmark. It's a specific structure designed for a very specific kind of investor. So, who is this really for? Well, it's for someone who can stomach a lot of risk, someone who's investing for the long haul, and someone who really specifically wants targeted exposure to the hospital sector. But here's the most crucial takeaway. Think of this as a satellite holding. It's a smaller, tactical piece of your portfolio that orbits around your big, diversified core investments. It's not meant to be the whole thing. So, at the end of the day, it all comes down to you. After you weigh the exciting growth potential against that very high risk, you have to ask yourself, is a targeted bet on healthcare the right prescription for your portfolio?